We're viewing this result as relatively positive. We were expecting it, like many others, given the opinion polling data that, once again, at least in the MRP methodology, seems to have performed relatively well. So these micro models seem to have performed once again. And generally, we think this offers the UK an opportunity for genuine policy stability after a period of obvious volatility, as you were describing in your comments. So for us, we're looking at the UK, much like the rest of continental Europe, as facing some serious economic challenges, a legacy of a sequence of supply shocks, a fiscal overhang in many respects from the pandemic itself and then also from the conflict in Ukraine. And what this result, we think, provides us with is a group of politicians that generally are fairly economically orthodox, fiscally prudent, I would say, and Rachel Reeves has done an awful lot to bolster Labour's reputation in that respect. And this group now has faces a situation in parliamentary terms where they will be heavily empowered. So we think this offers a good chance for a reset, a patient approach to the policy challenges the UK faces, and as they've emphasised time and again through this campaign, a focus on trying to work in partnership with business in order to try and improve the growth performance of the UK, which, if you look at the last 14 years, is an urgent agenda.
Totally. But looking at, some of the pledges that the Labour Party has made, ultimately, though, even if they have not won this election, the fiscal position is so limited. The headroom here is so limited. What can they actually deliver in the next couple of years that will actually boost economic growth when, the finances are not in such a good stage at this stage?
Absolutely. So there are two elements to that agenda, I think, or the answer to your question. The first is they will have to focus on genuine supply reform, which will be hard graft, as I would say, but certainly something that can be done. So this is the discussion around planning, which has been a serious impediment for the UK for some time, but also focusing on skills, trying to improve investment into the SME sector, and also take some tentative steps towards making the UK-EU relationship function more effectively. And certainly through those things, we think we could start to see a bit of a growth improvement by the end of the Parliament. But the other element, and this is more in the here and now, is more to do with rates. Because ultimately, if you look at the sensitivity of the UK fiscal position to interest rates, given the increase in debt, it is enormous. It's about 20 billion per 1 percentage point move in the rates complex as a whole. And in that sense, if I was Rachel Reeves, I'd be trying to play for time, hope that rates come down and this disinflationary process proves complete. Maybe tighten a little bit initially in a cyclical sense in order to try and accelerate that process. But that may be the most important lever in the near term to provide you with that space you need, exactly as you describe, in order to try and make that progress both on public investment and also on aggregate growth in the medium term as well. I
want to talk rates for sure, but before we get there, let's just discuss a little bit some of the ideas from the Labour Party in terms of the energy sector. They want to create this state support company. Ultimately, though, do you think that this measure would actually bring relief to households in this country?
I do. I mean, the GB Energy scheme itself, I think, does offer some interesting possibilities. Certainly our sense is, if you look at this space globally, states are trying to take on more responsibility, given the big electricity demands that we know are coming through. And economically, I would say this is a space that does have the characteristics of a natural monopoly. So you do need the state, or at least an overarching authority, to plausibly take an active role to try and improve efficiency. One of the most striking things to us at European economics at Citi is, if you look at electricity prices across Europe, they're about twice the level per unit as they are in the United States. Now, that's simply not a competitive state of affairs. You look at the UK, it's even higher. It's the third highest per unit cost of electricity in the world. So in that sense, I think we have to look at any proactive agenda there and welcome it. So GB Energy is an interesting change, and I think there are a few other elements of Labour's utility investment scheme that can work.
Let's look at the Bank of England then. Totally separate from politics, we know that, they keep reiterating that. However, though, when you think about what to expect from the Bank of England in the next couple of months, which camp are you? Do you believe that they're going to cut in August? Now that we've cleared this hurdle of the election, can they actually cut rates?
They can. We think they probably will. But there are a lot of uncertainties. This is not the ECB. This is not a group that has become data independent. So in that sense, we look at this and there's still the potential for the services inflation number on the 17th of July to shift their position. But in general, we think that the wording in June, this reference to finely balanced, has historically been used as a signal of imminence. And in that sense, we certainly think there is a large number on the MPC that are ready to go. The key question and the issue we still don't really have clarity on is the position of Claire Lombardelli, who is probably coming in as the median voter. And in that sense, before we really get a sense of where her intuition is on this question, it's hard to be too confident. So for now, we lean towards August, but with every risk they get pushed.